Hello and welcome again to FactorWave. Today I'm going to take you through our VIX strategies. So if we start here on the home page, we click on the Start Analyzing button. And this brings us to the page with all of our strategies on it. Clicking on the derivative strategies takes us down to our three derivatives ideas: the option screener, the future strategies, and the VIX strategies, which is what we're going to be looking at today. So the first thing we see here is a summary of our current positions. We have two VIX strategies, which I'll explain briefly in a second. The first is a term structure strategy, which currently is short VXX. The second is a volatility premium strategy, which is flat. The VIX term structure strategy is based on the idea that VXX, the VIX short-term ETN, has to hold a notional 30-day future. Unfortunately, this future typically doesn't exist. Only one day a month will there exactly be a 30-day future. So this means every day, to stay at the 30-day level, VXX has to sell front-month futures and buy back-month futures. Now, when the front-month futures are trading below the back-month future, this means in essence they will always be selling low and buying high. And this effect can create a drift in the VXX price. When the term structure becomes steep enough, we can take advantage of this by shorting VXX. Here we see the growth of an equity curve starting with a notional $100,000, where we trade always short $100,000 VXX position. So the exact number of shares will change as the price of VXX changes, but our dollar exposure remains the same. And this is the P&L from when VXX was first listed to the current date. You can also zoom in to find the P&L over the last 10 days, 1 month, or 1 year. If you want more information on the strategy, you can click on this button. This gives you a brief description. A lot more details can be found in our white paper. To access the white paper, you can come up here and go to the Learning tab. If you want to analyze this yourself and maybe play around with a different sizing method, you can always download the historical positions or P&L. This gives you a CSV file that you can do your own analysis with. The next VIX strategy is the volatility premium strategy. This takes advantage of the fact that the VIX normally trades persistently above the future realized volatility of the asset. That fact is known as the volatility premium. If the volatility premium becomes wide enough, it tends to snap back. So we measure the realized volatility and come up with a forecast of future volatility from that. And then we measure the current value of the VIX cash index. If that spread becomes too wide, we short VXX. And here we can see again the growth of a notional $100,000 investment from 2009 to 2016. And again, we can zoom in at certain time periods, look for more information on the strategy, or download the historical positions and P&Ls. So that's an introduction to our VIX strategies. Thank you.